What's up, guys? It's Money Domino. If you thought the market couldn't get any crazier, it just did. A few days ago, Trump announced plans to inject hundreds of billions of dollars into the housing market to lower monthly home costs. At first, this sounds like great news. Lower mortgage rates should make homes more affordable. But historically, moves like this don't calm the market. Instead, they often push prices even higher and sometimes create housing bubbles. This is one of the reasons why I've started selling most of my real estate this year. Not because I think the market will crash immediately, but because we are entering what many experts call the Great Housing Reset. Here's what's happening. Trump announced a plan to purchase $200 billion worth of mortgage-backed securities. When the government buys these securities, it pushes their prices higher and lowers their yield. When yields fall, mortgage rates drop. Analysts expect mortgage rates to fall by about 0.25% to 0.5%. That could increase buying power by up to 6%. Even now, 30-year mortgage rates have dropped close to 6%. But here's the problem. When mortgage rates fall in a market with limited housing supply, prices often go up instead of down. Cheaper loans don't fix the supply shortage. They simply allow buyers to pay more for the same homes. This supply shortage goes back to the 2008 housing crash. After that crash, home construction slowed down dramatically. Then, during the pandemic, millions of homeowners locked in extremely low mortgage rates. Now, those homeowners refuse to sell because moving would mean paying much higher rates. This has created a supply shortage that keeps prices elevated. At the same time, affordability has become one of the worst in history. In the year 2000, the average home cost about 1.7 times the average income. Today, the average home costs about 7 times the average income. That makes buying a home extremely difficult for younger buyers. Even worse, ownership costs like insurance, property taxes, and maintenance are rising rapidly. In some cases, homeowners are paying more for taxes and insurance than for their actual mortgage. So while falling rates may help slightly, the overall affordability crisis is still very real. Experts predict that home prices may continue rising slightly in 2026, but once inflation is considered, real value may actually decline. From my perspective, housing is no longer the easy investment it once was. Property values are high, returns are lower, and expenses are rising. That's why I'm simplifying my portfolio and moving into investments with better risk-adjusted returns. For buyers, this means being careful.